Okay, so this is part two. I just finished showing you this one trade, buy the 70 calls, sell the 67.5 puts. It's a little hard to tell from this graph, but if you want to break these up, then you can analyze each individual leg of the trade, and it might be a little easier. So let's go back to simulated. So we're going to sell the 67.5s right there, and we're going to buy the 70s. So there, I just put them in. There's a reverse order, but you change these to 5. So you can see, and sorry, that's wrong. This is supposed to be call. So I don't know what the prices would be if you break them up separately. You'd have to look on your accounts statement to see if you can find out what you paid for each individual one. But we can still look at the chart. Let's take this off. And it looks similar just because the price is a little bit different, but not much. And then you can uncheck one of them to see. So here's the call. The call will become profitable at expiration at the strike plus what you paid for it. So 79.35 in this case. Probably paid less because I think the current is 323. It's going up, so it's going way up in price. So I'll put 165 back in there, and then again you can also do the same thing for the put. I notice on the put the risk on this downside it goes way down because essentially you're going to buy it when the price hits 67.5. So there you go. Your profit on the put side is limited on the upside because you've already collected that up front. So in this case, at this price, we'd have to go back and see. We can actually do that. So let's do it. Let's go back to the thinkBack. On the 23rd, the 67.5 was 575. This one right? What about the other side? 945. It's giving us the same pricing. Maybe I'm not on the right date. Oh, I wasn't on the right date. So 23rd. There we go. So the October 67.5 sold it for 615. Now this is end of day, and I'm sure if you go back one day earlier, you'll see a huge difference in price. So it was 750. So yeah, it changed a lot over that one day. So we're looking at this is just the close price on Friday, which is not what you would have paid. But so we'll sell this at 615. Just change this to 615. And let's look at the call side. The 70. Buy it at 925. So 925. So this is more realistic. Again, these are a little off, but anyway, $3,000 is what you collected up front, and that's what you would keep as long as the stock stays above 67.5. On the call side, here's your break even again. So unlimited potential on the upside. So both of these are bullish. Put them together. That's what you get, and this is the actual real trade here. So it's not easy to see. You can probably condense this a little bit. It's probably making it worse. You need to stretch it out. probably not going to get to 80. Probably not going to go below, even here, you don't want it to go below here. So, and again, stretch this baby out. So, I make it a little easier to see it that way. There you go. And then you can try to store your balance. Okay, so I did the same thing for all of the other trades. Here's the other trades. Let's do the next one. I just put them on my main window. So that third trade, this is the risk profile. So you can see some more on here. IOC. Here's the third trade. I'll pop it right in there like that. And then you can see, it's a better show what the trade was, right? Buy, the December 62.5, sell the October 65. Let me just check to make sure that's right. Yes. One contract at 383, and then there it is. So, again, since it's a diagonal, your max profit would be right at your short strike price, right there. Here's current price right here. You can also start pumping up the date on here to see. Watch that white line move up because the white line represents the current profit. So you can see that your break even is dropping down. Keep going up to the expiration, and the closer you get to expiration, this thing is really going to start taking off in the center there. So even the day before, you're still giving up a lot of profit, $70. So the very next day, it goes all the way to max. So, and again, the thinkBack. I'm sorry, thinkBack right there. IOC. Notice there's no trades are down here. There. So I'll scroll down to find that one. We're just working on that one. And then it puts it on the chart. You can see I have a lot of other stuff. Let's clear that off again. Studies, edit, I should move all. And then I will uncheck this and check it, and it should put it back. And there you go. So that's when you got in on the trade. And it's constantly changing right now. So that one's down a little, not much. So next trade was PetSmart. Just a directional call. By the October 72.5 calls at $1.85 times 3. So PETM. And I'll just check that right there. There's the profit on there. Up and down, up and down. Let's look at the risk profile. PETM. And there you go. So you should be able to do the rest. I'll just run through them real fast. There's the SPX 1705 call. Let's go back and put that in. There's the SPX. You can see the profitability graph on that. Currently it's down $140. This is the new price slices. So if it's the thinkBack. So it's already put these in here, it's remembering them for me. So that's why it depends on what window. If you put it in the main window, it will remember them. If you put it in one of these detached windows, it doesn't remember them. So again, here's the profit on the SPX. So next trade was VIX. Again, not much different. Let's take out that one. Make sure that's the one we're showing. And VIX. Okay. VIX has been going downhill a little bit, and risk profile for VIX. 245, there you go. I think that was VIX was 2 trades, 2 contracts. Right. So here's your 0 line here. So it is down. What's the next trade? Young by the 70 call and by the 72.5 call. So 2 different trades. We can actually combine these together. So here is the 70 call trade, and here is the 72.5. Put them together, and it'll actually show your combined profit. So you can see which one is doing good and which one isn't. So that one's down $32. That one's down 121. And thinkBack. And one of the there's one. That was the one that's been longer from 7.9. You can see the profit's been started at 0. There's not really a 0 line, so I'll just hold my cursor right there on the 0 line. You can see it profit went down, 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 down as the stock started to come up. He finally broke even, dropped down again, and then it had a nice profit. You can see we should have gotten out. Hindsight's perfect. And then went down again. So let's look at the other one. The other one is much shorter time frame. And if you want to combine the two, here's your combined profit. So that's pretty much all there is for those trades. There you go. Okay, thanks.